Hey everyone, Scott Cunningham here, aka Scott C Business. Today I want to talk to you guys about dollar cost averaging and why I believe it is the golden investing strategy. So there's a lot of reasons and a lot of things. So let's just start off by breaking down what dollar cost averaging even is. It is when you have, your wealth and you're only investing a portion of it each interval of investing. Say you're investing once a week, you're investing once a month, whatever it happens to be, you are investing in intervals over a long period of time. Because say you put all of your money in at once and then the stock goes, or whatever stocks you're investing in drastically go down. Well, now you can't buy the way cheaper stocks and, get that great price opportunity, assuming it's a good stock and it's going to go back up in value. And B, if it's not going back up in value, well, you're pretty screwed. I mean, you should also just be diversified in what you're investing in too. There's only a couple times that, people can make the argument as to why you probably should do a lump sum invest versus dollar cost averaging. And we'll cover those couple examples. The Motley Fool, they say, and this is absolutely correct, if the market tanks, if we have a market crash like we did this year, that is a great time to be investing more money into the market, which is absolutely what I did. Dollar cost averaging is your baseline strategy. If there's a market crash, you should absolutely take advantage and buy the dip. I was lucky enough to invest a good portion of money at the absolute bottom of the market. And that was mostly luck. But, obviously I was watching the markets very, very closely as to when I wanted to put in more money. But I was still dollar cost averaging the entire way through. I was a little risky because I was investing a lot of my money, even when I had very little originally. As an emergency fund, I was putting everything in because the prices were so low. So that might be a good time for you to have a little bit of money saved up to then buy the dips. But when you're dollar cost averaging, you're still buying the dips anyways. The difference here is the only time that you would really want to try to time the market is when there is a massive, massive dip. Otherwise, if you hold on to your money waiting for the next dip, waiting, your money is going down in value. You're missing out on dividend payments, stock appreciation, all the people who are saying, let's just wait till the next COVID wave hits. And of course, all the stocks go down. Crypto has been just going up. So that's definitely not the case for crypto. And for me, a lot of my stocks have been going up or not having crazy swings. I don't see a second wave happening, but even if there was a second wave, I would just then again invest another good chunk into the dip and continue dollar cost averaging. You shouldn't be regularly holding on to large sums of money and waiting for dips because again, inflation is taking a chunk out of your money. You're losing out on dividend payments and price appreciation of those stocks. So unless you have some ridiculously amazing insider knowledge, most likely you're not going to be better at timing the market than you are with dollar cost averaging. I would assume that the average person who watches my videos are not, millionaire investors who are just so ridiculously successful. Why would they even watch my videos talking about this stuff? Most people who are watching my videos are probably in a similar boat to myself or, whatever it happens to be. They are probably the best, or you are probably best off dollar cost averaging, as most people would be. A great example was, this isn't exact. It was in a recent video that I watched by Andre Gique, who's a great financial YouTuber. And he showed that over a 20-year period, when people were, investing lump sums, trying to time the market, even when they were getting the best days, right? So in 20 years, they got the 10 best trading days and they were holding their money in between those periods. They ended up with $400,000 less than someone who had dollar cost averaged the whole way through, because they weren't losing money to inflation. They were getting dividend payouts and all of the price appreciation through all of those. Whereas the person who, even though they timed it perfectly, they were losing money to inflation. The times when stocks did appreciate and they weren't invested, they were missing out on that. And yeah, you are getting these great dips, but you're just missing out on so much, especially like compounding interest. When you're getting dividends, reinvesting, all of that, you're missing out on so much, because we all know that, if you're very young and you start investing, time is on your side. The more time you have to invest, especially if you're investing long term, the better it's going to be for you. Dollar cost averaging is absolutely a long-term strategy. So if you're not trying to invest long term, then maybe it isn't for you. But if you're not trying to invest long term, I would say you're probably getting close to trying to be a day trader, or someone who is trying to trade stocks and actually make a huge profit of that in the short term is very, very challenging to do. And most people lose money doing so. So you're best off investing with a long-term strategy to begin with, if you want to actually end up with a lot more wealth than what you originally put in, because you could even lose money by doing short-term investments and day trading, and more or less gambling is what I would call it. So another two good reasons why you might use lump sum to invest versus just dollar cost averaging. If you have a crazy amount of money and you don't want to just, put $1,000 in every month because you've got $100,000, and next year it's going to be worth, 3% less or whatever inflation is. It's not 3%, but well, I mean, with hyperinflation, maybe it is. My point is, though, you're going to be losing money if you're just holding on to too much money, right? You're better off putting a good portion of that into various assets. If you have a crazy amount of money, you might even just look into getting like a real estate property. Or if you get a big inheritance, a big tax refund, retirement, something, you get some huge, ridiculous 200x win, and you've got all this money now. Again, very similar to sitting on loads of cash. You don't want that to just, you don't want to lose a bunch of that value to inflation and to all the other things that I mentioned. You want to make that money work for you. So yes, again, in that instance, even I would be investing in much larger quantities, or at the very least doing one larger lump sum investment like I did with the dip. But again, dollar cost averaging is always going to be the safest way to invest, because you're exposed to everything that's happening, the ups, the downs, everything, but you're also getting the dividend payouts, the compounding interest, all of the benefits, and you're just you got a lot less risk overall. And because you're doing this over an extremely long period of time, we know historically that there's a lot more green than there is red, at least in the stock market. And even with crypto lately, it's been extremely bullish. With crypto, it may be a little different because of how volatile it is. But me personally, having dollar cost averaged into Bitcoin over the last year, my portfolio is up a ridiculous amount right now. Over the past just 1 year, my portfolio is up about, I believe it was almost 300%, but let me just quickly double check. I shared this yesterday. So currently my portfolio is up 297% according to Blockfolio over the past 1 year. Again, I have been putting money in, so it's not like this is just crazy appreciation, but it's probably less than half or maybe half. So the amount that it's gone up is just ridiculous. And by dollar cost averaging in, I was able to just get the best of it. There were times where I might have bought Bitcoin a few days earlier or a few days later than when I normally did. So in a way, I was sort of timing it, but not really, right? Like I was dollar cost averaging in the same way that I generally always was. Just days where I was sort of anticipating it was going to go down, or days where I thought it was going to go up, I might have invested a few days before or after. So that's not really timing the market. I'm still doing my, monthly interval, just maybe changing it ever so slightly. That's obviously fine. And I mean, I've been dollar cost averaging into the stock market for quite some time, aside from my lump sum investments in the major dip. And my crypto dollar cost averaging has proved to net me more money than dollar cost averaging into stocks. Though I will say that all the stocks I'm investing in, like 98% of them, are dividend stocks. So that is a little different, whereas some of the a good portion of the cryptocurrency that I'm investing in is for growth, whereas a lot of my stocks are just for passive income. So that is a little different there too. But, it's something worth considering that I've made significantly more money by dollar cost averaging into Bitcoin than I have into the stock market. So, that's something worth considering. But the whole point of this video is that dollar cost averaging, if you're trying to build wealth for the rest of your life for long term, you want to end up with, a good amount of wealth, whether it's paying a passive income or it's just growth. Either way, dollar cost averaging has proven to be the best over a 20-year average returns, by far, by a large margin. So again, you can look at the stats and they will support dollar cost averaging. The reason that not everyone does is because it's not as sexy, or it's not as appealing, if that makes sense, right? It's very, fun and exciting to be investing huge amounts of money, because it feels a lot more like gambling and you're taking this huge risk and you might get this huge reward. But do you want to take those risks with your finances? And more importantly, what makes you think that you are so good at timing the market that you're going to perform better than just doing the simple method that has proven time and time again to net more money over a long period of time than even if you got the best days? So imagine 20 years goes by, right? Just an insane amount of time, like something like 7,000 plus days. How could you get 10 days out of 7,000? Right. You would have to be watching the stock market every day, checking in all the time, treating it like a part-time job. Dollar cost averaging, you just need to generally know the stocks that you want to invest in, and once a month or once a week or whatever, just you have very small amounts of time that you dedicate to just double checking it, making sure you're still doing, you're still on the right path, and then investing the same way you always are. It's very, very passive compared to how much energy you have to put in to timing the stock market. And the worst thing is that you may do it wrong, because it's very unlikely that you're going to get 10 out of 7,000 of the best days. You may end up trading on the 10 worst days and losing money versus making money. So it makes a lot of sense if you're trying to build wealth for the rest of your life, if you're trying to set yourself up for success over a long period of time, which is how most people should be approaching investing. Dollar cost averaging is absolutely the golden investing strategy. I'll invest in altcoins every now and then with some extra money that's coming in from my LBRY videos or whatever. If some extra money comes in, sometimes I'll use that for something, test new things out, try new things. But the bulk of my investing is dollar cost averaging into the sound cryptocurrencies and stocks that I believe have great fundamentals. And I have a lot of faith that they're going to continue to go up. And more than faith, they have proven themselves time and time again to be, worth investing in, not just based on my faith. So that's it for me. Let me know what you guys think. Are you dollar cost averaging? Are you investing in lump sums? Are you timing markets? What are your thoughts on all of this? Do you think there is a way to time the market that is more effective than what I'm talking about? Are you trading with like bots? Let me know, what is the best way to trade? What is your strategy? And what's the best way to make money these days? Let me know in the comments below, and let everyone else know so that they can chime in and share their thoughts as well. Thanks so much for watching this video to the very end. Since you did, it'd be awesome if you could give this video a like and comment #1ham in the comments below. Also, it'd be awesome if you could subscribe to this channel and follow me anywhere under @ScottCBusiness, because I'm basically on every platform. You can find all the platforms that I am mainly using though at www.scottcbusiness.com. You can also find all my social links as well as my crypto addresses if you'd like to donate to me on Cointree at cointree.ee/ScottCBusiness. And you can also donate directly by donating to scottcbusiness.crypto or scottcbusiness.eth with supporting wallets. Anyways, thank you guys so much for watching. I really, really appreciate your support. I'm Scott Cunningham, aka Scott C Business, signing off. Cheers.